Hi guys, just 10 minutes to midday. Start with the S&P today, Tuesday the 19th of May. Range bound, still range bound. You've got to expect, the way we finished yesterday and have started off so far, that we drift back lower, to be honest. That's what the technical aspect of this chart is telling me. The key line in the sand would be, for me, the 2900 area. Around this kind of point here in the futures, that low that we had on the 11th of May, we tested it, retested that area on the 13th, broke through it yesterday. That's your midpoint that I'll be looking at. You know me, I'm still bullish on this, and I would add to the position if we close the day above these highs and retest and come back down. So yeah, I mean, looking at this, it's range bound still. We're just at the top of the range. We're effectively talking about now what we were talking about on the beginning of the 14th, and what's to say this market can't come back down to here and stay in this range. That's while this isn't going to happen, the main move would happen if we were to break either way, and that's how I'd be looking at this, to be honest. Euro yesterday, it held that trend line phenomenally well. You can see a couple of lines on here, and this is how I'd be looking at things at the beginning of the week. We're above here. We've come back to test that level, pushed higher, never got down below the trend. Yes, there was opportunities in there, but the cleaner move can sometimes happen on a break of that. Biggest short squeeze you can see, gone through to where the next target would be, and really I'd say 109.84 is where people might look for some sort of resistance. This dollar weakness, trying the pound is really trying to get above. For me, it is actually a long if we can close the day above this whole point. But the bears, while you wouldn't feel massively comfortable, are in control here. They're in control. As long as it stays above there. Think of that as the trend line in the euro to the downside. It's just the same sort of level. If it go above, then fine, we can continue higher. If it holds, we drift back down. Gold, a market which pushed higher last Thursday, has unwound a lot of that move, and actually on the futures we came back to pretty much where that break point was, and we're now $10 or so above it. Pretty key level. Bit of a trend line worth having on maybe from those lows. Didn't quite make it, but you can just get the feeling that it's going to be an important zone there on gold. Long above 1742. I don't think that's necessarily a bad trade. It's holding price up here. Obviously got the pivot, but nice original low. Long above there, short below the trend line. I think that's kind of how I would be looking to play this. The NASDAQ, which has been a good driver of things, you can see has come down pretty strongly. Negative on the day, and it filled the gap. It filled the Corona gap that people have been calling it. Could obviously be the high for a while. While I don't necessarily think that's going to happen, you can see why people would take profit there. It's got to come down. Where's the line in the sand? I would say potentially 92.02, the high that we had on the 13th of May. Maybe we come back down to this level here to get another long in. I think it's going to be a pretty interesting day for equities. We hit very key resistance points, and whether they can push on or not, we'll have to wait and see, probably to the cash open, but they're big resistance, so the next move can't happen really until we get above them. And just be careful of any pullbacks on the S&P, because pullback long here, previous high, doesn't work. Previous come up here, long pullback doesn't work. And likewise with the shorts, this is the bigger range, the more important point. So just be careful about going long below these highs is what I would summarize there. Anyway guys, hope you have a great rest of your day, and I'll catch you all tomorrow.